Assalamu alaikum and welcome to the Millionaire Muslim podcast by Islamic Finance Guru. And I'm very excited to be here with Primary Finance today, the team from Primary Finance. So we've got Ahsan, we've got Razaullah, and we've got Salman, Sheikh Salman, who many of you will have heard of from the Ibn Jabal days as well. And I think you've done a lot of things in the interim, but we'll get into all of that. The reason why we're talking to these guys is because at Islamic Finance Guru, or the last few years, one of the big topics of discussion has been where, are Islamic mortgages really Islamic, and is there a really truly halal version of an Islamic mortgage or a mortgage in general? And if so, point me in the right direction. And Primary Finance are a young company. They've been running for the last few years. You've been developing the model, working with the FCA, and they believe that they've come up with the solution. So excited as I am to talk to them, I've turned up, and inshallah we're going to find out all about this. So perhaps one of you guys can just in a nutshell tell us, what is Primary Finance?
So Primary Finance is very much an ethical provider of home finance. We've developed a brand new type of home finance, which is a rival to a traditional mortgage, which is based on the principles of Sharia, but aimed at being relevant to people of all backgrounds, not just Muslims. And the way our model works is effectively on the principles of co-ownership or partnership. So although the home buyer technically owns the property from day one, their name is on the title deed, we have an agreement that we treat the product or the property as a partnership. And what that means is we take all risks jointly as partners and we make decisions as partners. So to give an example, if two people purchase a car together, or if you and I purchase a car together and we each put in 50% of the value for the car, neither one of us has loaned money to the other one. We are both partners in the car. So you don't owe me the money I've put in, I don't owe you the money you've put in. And this is the principle of the product that we've created. Brilliant.
And it'd be really interesting to hear your own personal stories about what brought you to doing Primary Finance in the first place. So maybe I could start with Ahsan.
Yeah, sure. Well, I think for me, I probably would say I'm closest or more akin to the typical home buyer. So, my background is in the financial services. So I see a lot of products out on the market. And as someone that tries to practice their faith, when you go to acquire a home, you go out to the market and you think, well, what products are available for me to buy my home?
Right.
So there's a number of products, and one of the things that becomes quite apparent very quickly is a lot of them are your typical mortgage, as you would consider them, your conventional mortgage, your debt-based products. And the alternatives are very few and far between. So, this conversation isn't really about whether, those products are halal or not. It's very much a case of, if you went out to the market and you said, well, I want an Islamic product, which is competitive, which is fair, which puts me in the driving seat as a home buyer, then are there any products out there? Now, for me personally, I didn't feel that was the case. So being in the financial services and kind of the alternative investment sphere, I thought and felt that there could be something better. And I felt that, it was one of those instances where I could either sit and wait for someone to come along with a solution, or I could take my skill sets and put those to good use. And for me, that was probably the driving force a number of years ago, and that kind of spurred me on to trying to find a solution. And I guess really that brings us to where we are here today after many years and many days of exercise in our passion for coming up with a viable solution.
And do you guys know each other from quite a long time? How did you come together?
It's quite interesting, actually. So Sheikh Salman, as you mentioned very rightly, was previously involved in the Ibn Jabal Institute, and actually I was one of the students at
I see.
So that was actually the first time we met each other. But at that time, that was several years before Primary Finance was even an idea in my head. It was actually several years later that a mutual acquaintance of ours put us in touch. So I founded Primary Finance a couple of years ago, and I was looking for. So I put the I guess the structural bones together of the product, and I was looking for somebody who can sign off from a Sharia perspective.
Yeah.
And I was going around the houses, and a mutual acquaintance of ours who works at the Bank of England actually put us in touch, and it was then that I realised, wait a minute, Sheikh Salman, I know you already. I actually, at the time when I was at Ibn Jabal, didn't realise Sheikh Salman was a qualified solicitor as well.
I see.
And so it just ended up being, the perfect match, and Sheikh Salman came on, and then Ihsan and I, when I was working in the London markets in the financial sector, Ihsan and I used to work very, very close by to each other. And
I see.
We ran in mutual circles, and that's how we met and got to know each other, and Ihsan came on as a result of that.
And from our sheer magnetism, we just collided together. And I think part of that is, the fact that we were like-minded people, and I think the fact that Raza was very passionate about it, I was very passionate about it, and so when we would have discussions, just kind of maybe airing our thoughts about things, and that spurs on conversations about, like, I'm going out onto the market and I'm thinking about buying my home, but then it costs 3 times as much, or there's certain issues or complexities in there that I'm not comfortable with, that then brings you on to I wish there was a better solution. And it's that moment where you kind of look at each other and go, well, maybe we could do something about that. Mm-hmm. So I think part of that is, the passion that we both had, and everyone has within the team, kind of exerts out of us, and that's what drew us together.
And it's an interesting point you mentioned about, how there's this kernel of, I can do something here about this problem that I've identified. And that's a very entrepreneurial streak, which I think, Sheikh Salman, you've always kind of displayed that, where from when I've heard of you, you've been setting up institutions and organizations.
Yeah.
I don't know where the earliest point in your life was where that started.
Well, it started straight out of university. I after graduating, I studied law, but in my heart of hearts, I realized I'm actually passionate about Arabic, and most of the people I've met and dealt with in my life have actually been my Arabic students. So my network is actually quite vast, because there's been hundreds, maybe thousands of people I've taught Arabic to, and then we've started working in other capacities, and Raz is an example of that. And I continue to do that. So a lot of the people who are now coming to me about primary finance, about Insure Halal, which is the other business, the Islamic insurance business that we have, are a lot of my Arabic student network, and now I teach through the Arabica Institute. I just want to talk about the passion that kicked this off. So I came out of university, decided I didn't want to be a lawyer, went off to Damascus, studied Sharia.
How long were you there?
I was there 3 years.
Pretty much.
And then I specialised in Hanafi fiqh and various other Sharia sciences. Came back, and then somebody suggested, why don't you become an Islamic finance lawyer? So I thought, well, I avoided being a lawyer, but Islamic finance is interesting. So I thought it's a great job, because I'd get paid to study Sharia, which is the perfect job. And where can you get someone who pays you to study? A professional student. So I joined an English law firm, worked a bit here in London, and then out in Dubai for a while.
What law firm was it?
Simmons and Simmons.
Okay, cool.
So and I only did Islamic finance. But the thing that really I found grinding was that throughout the Islamic finance industry, you had Islamic banks, Islamic financial institutions, reverse engineering conventional interest-based products through various mechanisms, and essentially creating debt in the same way that conventional banks create debt. And I thought to myself that maybe what we could do is let's do something refreshing, something where the financial institution or the financier does take genuine risk in the asset that they finance, and it's a non-debt-based product, and that's essentially what primary finance is.
Brilliant. So I mean, that sounds like a perfect time to ask you how what you guys are up to is different from anything that's come before in the Islamic mortgage space or the Islamic finance space.
Yeah. So from a Sharia perspective, I think the key difference between what we're doing and many of the other Islamic financial products. Now, we're not here to say that a financial product provided by any other institution is or is not Sharia compliant. That's
Right.
not our job. So we're here to speak about primary finance. And what we want to say is that we don't require the home buyer to buy our share off of us, of the property. Suppose we put down 90% on day one, they put down 10.
Yeah.
And then they will buy our share from us over time. So it's like a diminishing musharaka. It's a co-ownership that diminishes over time. Now, we don't require the customer to buy our share off us if they can't or don't want to. So essentially, they don't owe us any money except the rental bit.
Right.
So because of that, there's no debt. And that means that if there's a loss made on the asset in a very remote situation where there might be a negative equity situation, and for some reason we just have to sell the property and a loss is realized on the asset, as the financier, we will and we must, for Sharia compliance purposes, take our share of that loss. That's the first key thing. And the second key thing is that because they don't have to buy our share, they're never in debt. So, for example, if they lose their job and they can only pay the rent bit, then they can just carry on paying the rent until they get another job. We won't go in and foreclose, take their property and sell it quickly just to recoup our money. We just simply will not do that.
And there's also a couple of other more commercial things which actually separate us from the pack. So in particular, the amount of flexibility we give to the home buyer. So if you imagine a conventional mortgage, the home buyer must pay interest plus capital in every single month. It's a fixed amount they must make in every single month. If you're a penny less, it's considered a default scenario. Whereas what we allow the home buyer to do is pay rent as a minimum, but then purchase any amount of equity back from us they wish, which could be zero if they want, or as much as they like. And our intention is to always sell the equity back to them at whatever it cost us. Now, what that means is the home buyer has incredible flexibility. So when times are good, they can purchase more equity. When times are tough, they can just pay rent. Now, we actually, although the home buyer only needs to pay rent every month, we don't want to trap people in a rental cycle. And so what we do is we actually incentivize the home buyer to purchase equity by giving a very significant rental discount in any month where they purchase a recommended level of equity. So, for example, if you say to me, I want to fully own my home after 10 years, we'll calculate how much equity you should be purchasing every month to fully own your home after 10 years. And if you stick to that amount of equity in any given month, we'll give you a rental discount in each of those months of up to 50%, which is humongous. So to put that into context, let's say we're 50-50 partners, and to rent the property normally on the open market would cost you £1,000 per month. Because we're 50-50 owners, we'll charge you market rent, so it's not linked to interest rates, linked to the open market. We'll charge you market rent scaled down for our share. So instead of paying £1,000 per month, you only owe £500 per month. But now whenever you make that recommended level of equity purchase, we'll scale that rent down even further to only £250 per month, for example. Now, the discount will vary from customer to customer, but it can be up to 50%, so it's very significant. And what that provides is a massive incentive for people to actually purchase their homes rather than just rent for the rest of their lives.
But they can choose to, as you were discussing, just choose not to purchase their home.
Absolutely. They can choose to. I mean, many people rent all their lives as a lifestyle choice, right? That's a lifestyle choice. And it's not for us to say, you know, if I have a pen, I can't force you to buy my pen off of me. It's up to you if you want to buy it, right? Similarly, we own a share of the property. We can't force you to buy our share off of us. It's entirely up to you. So you can just choose to rent all your life if you like, or you can buy our share off of us. And this gives incredible flexibility. It also makes the pricing very, very clever, because when the home buyer is treating the product like a rental product, they're paying rent in line with renting on the open market. When they're treating it like a home finance product, the rental discount aligns the cost to the high street. So they pay in line with other home finance products, and it makes it very competitive.
So this sounds really interesting. Do you think that there's a possibility that you'll get people who are not Muslim who are going to be using your product as well?
Absolutely. So we've had incredible responses across the board from Muslims and non-Muslims. I mean, the beauty of this product is that it's blind to your belief system or your faith or your creed or your colour or anything. It's just a very ethical, very fair product. You know, the traditional products at the moment offered by conventional banks, they pass all of the risk onto the home buyer, and the bank effectively takes all of the reward. And they are very, very stringent upon what you must and must not do, and you can lose your home if you don't stick to those very stringent requirements. What we've done is make the contract much more equitable between the financier and the home buyer, so that you share the risks, you share the rewards, and you make all decisions together, and you have security of your home. This is another very unique point about our product. We have the concept of an equity buffer. So whatever money you put into the property is your equity in the property. If you, let's say, can't afford to pay your rent, you can actually trade equity with us instead.
I see.
So to put that into context, the average home buyer who has, let's say, a 10% down payment, if they lose their job on day one and they can't afford to pay rent from day one, that equity buffer will on average see them through 2 to 4 years of trading equity back to us. Whereas a conventional mortgage, you may get 2 months, and then the bank will come along while you're down on your knees having the hardest time of your life and potentially kick you out, and you may end up with nothing. So we give incredible security to the home buyer, which I don't believe any other product in the world offers at the moment.
Wow. And how long have you guys been running, and what have you been up to since you launched?
So we haven't actually launched yet. We're looking to launch, inshallah, middle of the year.
Yeah.
We've been in development stages for the last couple of years, but inshallah we're very, very close to launching now.
And you talked about how there was a lot of traction that you were getting. What kind of conversations have you had with potential customers, and what's been their feedback that you've?
I think the response that we've had back from potential customers is overwhelming. I think everybody that we've spoken to about the product, and as Reza has discussed, he's touched on some of those elements. It's been really positive, and I think a lot of the times the question is kind of reversed of actually saying, are you really able to do this? Because you kind of have a mindset of kind of going back to my original point of most people think the status quo is a debt-based mortgage is the only thing that you have as an option when you buy a home. So as soon as you put something else on the table, it's very alien. So it takes a while for people to get their head around the fact that, actually, I didn't realize that you could buy a home with a product that wasn't a debt. So as soon as you introduce the idea of a partnership, you go, that's really simple. And so, the topics that Raz has been talking about and the concepts that we have in this product are really simple. And they can be explained, and someone will actually, and the feedback, as you're saying, the feedback from customers has been overwhelming on the basis they go, that's actually rather simple, and I understand that, compared to a typical mortgage where you go, I'm not always certain, I just know that I've borrowed X amount of money, I've purchased my home, and I need to give that back, but I don't really know how much I'm paying back by the end of it. And I know that 20, 30 years down the line, if I get in trouble, then I really have to think about my financial position. Whereas when you put this proposition in front of them, immediately you see that people are a little bit more relaxed, and they go, actually, so what you're saying to me is I'm a partner in this, and if I am suffering financially, I have a stake in it. Well, that sounds like a partnership, that feels like a partnership. So for people to understand it conceptually, it's very easy. And so therefore when they ask the question, it's for most people, most of our customers, it's very much, how soon can you launch, and how soon can we have a product?
Can I be your first customer?
Everybody wants to be the first customer. So we've got a really
go on.
We've got a really simple question, and we frame it like this: that if you could purchase your home and get financing on it, and over 20 to 30 years you pay approximately what you'd pay elsewhere, but never be in debt, would you go for it?
Yeah, of course you would.
And it doesn't matter if you're a Muslim or a non-Muslim, the answer to that is always yes. And then people say, what's the catch? And we say, guess what? There is no catch. It's true. This is possible.
Yeah, and the key is, I think part of it is, I think, as they say, there's no such thing as a free hot dinner. But in this instance, it's not free. But the point being is just, it's something that's new and something that's alien, where people are going, I just didn't know that you could buy a home like this. And there is a space in this in the financial market for such a product. And so when they go, actually, I can buy my home, it costs roughly about the same amount, and I'm not in debt. Right, there's got to be something iffy about that.
There's got to be a catch.
That's because everyone's so used to going, well, if I have a mortgage, then if I don't make a payment, I've defaulted. And 3 defaults, 3 strikes down the line, my house is getting repossessed. So that's, people are coming from a very skeptical position. So we're trying to bring people back to normality of actually saying, well, no, that's a very punitive way of looking at it. Whereas if you look at it from more of an equitable way, this is just the norm.
And to kind of rephrase that classic question you get, why do you think that someone hasn't done this before, and why do you think now is the right time, all things considered, for you guys to do what you're doing?
I think the reason it's not been done before is because the banks have dominated the market, and their funding model works very differently to our funding model. So the way a bank conventionally works, and let's not get into how illegal I think this should be, but the way a bank conventionally works is you deposit £100 in your bank account. The bank lends £98 of your money out. So they've created £98 out of thin air because it's still your money sitting in your account. You have immediate access to it. But now somebody else is walking around with £98 as well. So they've created £98 out of thin air. It's called the money multiplier effect, if people want to go and look it up. And so they lend that money out, they make a return on it, they give a very small fraction of that back to you in your depositor account. But the only way they can get away with doing that is if they can absolutely guarantee you're going to get that money back and that it's going to be available to you on demand. Right? So to be able to guarantee that, they can't take risk with that money. That means they have to pass all of the risk onto the home buyer. Right? They can't accept any of the risks themselves, they can't accept any of the partnership risks. And that's why the banks haven't done it to date, because their funding model doesn't really support it. Now, banks do have investor accounts and they get investment money in as well, but the bulk of their funding model comes through depositor accounts. That's how the whole lending cycle works. And so that's why it's not really been done to date. Whereas we're coming with a completely fresh approach. We're not a deposit taker, we're not a bank. The way we'll be funding it is through investors who know that there is a risk attached to the investment, because we have to share in the downside risk if the downside risk crystallizes. And therefore they understand that it is an investment and not a guaranteed deposit. And the funding proposition is very different, and that's why it's actually possible in this case.
Interesting. So there's your source of capital is traditionally a lot more expensive than what the banks have. So my question, and this is an open question, is would you guys not be under some pressure when you have a credit crunch type scenario? Is it not fair to say that if your source of capital is more expensive, then the product has to be more expensive as well as a result?
So, So we believe we can offer the product for a very, very competitive rate compared to what the banks would be charging on the high street. We're not going to go ahead and say we'll be the cheapest on the high street. There's no way we could be, even if we were offering the same product, because you've got giants like HSBC and Barclays. But at the same time, we believe we can offer it for a rate that we shouldn't be the most expensive on the high street. We have a very firm intention not to charge more than we have to charge. So what we don't believe in is the Muslim tax, where Muslims pay more just for being Muslims, right? That's something which goes completely against our fundamental beliefs and values in this business. So we charge what we have to charge, but we believe we can make that very, very competitive.
I suppose you will have to always charge some premium, given that you're a startup, and you've got all of that structuring cost that comes with it, and you've not got scale necessarily. And arguably, in the first instance, given that you've got a relatively smaller audience, you need to charge commensurately. Do you think that's fair?
Well, what is fair is that our investors are taking risk, and so they need to be compensated for the risk they're taking. But what wouldn't be fair is to charge more than the amount of compensation we need to give them. So even though we're a startup and we're small and we don't have the economies of scale, we're operating on a very different basis to a very large entity, right? And what we want to do is be a very tech-focused business where technology drives, the whole customer experience from start to sale to managing the payment system on a day-to-day or monthly basis. Make it very tech-focused and therefore be very streamlined and have a very streamlined expense base so that we can offer a very competitive rate.
And how's that working? I mean, I speak from personal experience. I know that a lot of startups that we talk to struggle with the tech side of things, because there's a bit of a dearth in the market for just the skill sets that you need.
I think you're right. As in, but I think what's quite evident, just if you kind of step away from maybe Islamic finance, but just look out onto the market across the board, there's a number of startup companies that have come about Just within, just mentioned a few, like for example, Monzo, Revolut. I think there's a new one called Flux, which is basically the start of the technology is there. So I think from our perspective, I don't think we're going to be reinventing the wheel. But there is a challenge, and the challenge is making sure that you have. I think that from our perspective and the way I see it is the technology is available, the skill sets are there, but it's that implementation, and so that you've got a home buyer that can from day one have a system that is usable and that is user friendly all the way from start to finish, and maybe that will be part of our strategy in terms of saying, well, we have a system in place so that it's there from day one. But also the other point is, touching on that startup struggle with that's maybe because that might be something that is secondary, and they're focusing on the product. From our perspective, the product is already there, it's available, it's really just kind of wrapping that up in a nice bowl, which will just be that technology side of things. And so from that perspective, I don't think it's that much of a challenge. I think there's obviously going to be challenge to make sure that it's user friendly, and it addresses all the kind of usability functions and user experience points that we want it to. But I think that's just going to be part of our journey, and I think it's already been tried and tested, and we're walking down the trodden path. So I think the risk is a lot less. But I still would say it's still a challenge, but it's something that I think
on the technology, we actually have an advantage over big financial institutions because they're so big and they have to handle so much data and they're so heavily regulated. Because of all of that data, they find it very, very difficult to move and transition into new technology. Whereas because we're a startup, we're very new and light, so we can adopt. We're nimble. We can adopt all of the latest technology, and that's the experience we had with Insure Halal. So we're an insure tech solution. And we were able to take all the latest APIs, latest technology, and set up very quickly. We didn't have to reinvent it. We just brought it in from partnerships with existing technology providers, and that's how we will operate. We, as you said, we don't reinvent the wheel.
And it's an interesting point, and I think part of that is kind of going back to one of your previous questions, which is why are other people not doing it? Because part of that is cost, and banks are cost sensitive, institutions are cost sensitive as well, and so what you have is institutions that have legacy software, legacy systems, and then to move along with the kind of the progress or the evolution of banking, for example, and just to like draw from my own experience, and I won't mention it. So I'm with a conventional bank, and I'm also with one of the new digital banks. And what I found quite shocking was how one of these new startup companies was providing me information, functionality on the banking side, which I would have expected from one of the bigger banks. But that wasn't coming, and the reason why is the key is nimble. Is they've gone right. The banks exist, but they've got systems which make it cumbersome, make it difficult for them to be nimble and for them to move with the times. So why don't we look afresh and say, right, let's just start from this point and say, well, what does the 20th century individual now want? Well, they want to see where their money's going, how it's being spent. And one of the key things is take a lot of feedback. There's a big emphasis on, from Kickstarters and startup companies that are going, right, give us your feedback, give us your ideas, and then building that into the technology. And I think that's going to play a key role on how not just us, but other startup companies are going to roll out their technology platforms.
So because our product is so dynamic and flexible, a customer can on a daily or monthly basis decide, well, this month I do or don't want to purchase equity in my property. And all they do is open up their app and then elect what they want to do, and it will recalculate how much their rental is, and then and they can decide, do they want to extend their term or do they want a slightly higher monthly payment from next month to address that. So it's
and I mean, this technology solution is going to grow over time. It's not a one-off shop, right? So the idea being that, when I mentioned we want to, inshallah, launch by the middle of this year, we don't need to have the full technology solution in place to be able to launch and start doing business. But the idea is we want to grow that and improve it continually over time. And we are starting to see the big banks adopt technology solutions now, but the take-up has been incredibly slow and incredibly lagging behind the startups. So, you've got great success stories in the fintech space, and some of the new online-only banks. We set up a bank account with a new bank called Tide, which is an online-only
Yeah.
bank, and it took us 5 minutes to set up our account.
Yeah.
We uploaded our information digitally. We had the card delivered 2 days later. We were up and running. Whereas to set up a bank account with the likes of HSBC or Metro Bank, for example, it takes a very, very long time. Metro Bank pride themselves on how quickly you can set up a bank account with them, a small business bank account. And even then it just takes incredibly long. Whereas with Tide, we were up and running in literally 5 minutes. And that's the technology, that's our ambition, that's where we want to get to. That the customer can apply for finance through their smartphone.
Yeah.
They can upload all their documentation, have their ID checked in real time while they're looking into their camera, and then they can get an acceptance in principle, in record time rather than having to come in and out of branches. And then once they're actually, up and running, they can, as Sheikh rightly mentioned, change their payment profile from month to month whenever they like, as much as they like.
And do you think that you will be able to be a bit more lenient when it comes to like credit history and things like that, given that this is not a debt product?
So that's certainly where we want to get to. But initially, whilst we're small, we have to be very careful how much risk we take. Now, because of the built-in security mechanisms I mentioned, like the equity buffer, in theory we can take more risk, right? Because the equity buffer actually eliminates some of that risk for us.
Yeah.
But whilst we're small, whilst we don't have a very stable, big book of business, we need to be a bit careful in limiting that. But we certainly want to get to that point once we start scaling up and have a lot more business. We want to, our ultimate ambition is to help people get onto the property ladder, help people who have struggled to get finance in the past, especially the financially excluded. They're the ones we're really trying to support. But we need to be careful how quickly we start doing that.
The advantage that we have over a lot of the traditional banks is a lot of them, when they check your credit history or your affordability checks, they use a very blunt instrument. So they'll assume that your monthly cost is because you have a house and whatever and so many children and XYZ, that your monthly cost is such and such. But actually that can vary quite significantly between different families. And so because we're small and we're technology driven, we can actually be much more sensitive to the actual needs of the customer. Where a bank might turn them away, we can say, actually you can afford this because we can see that your monthly costs aren't as high as, say, another big bank would assume it is.
Yeah, I think it's worth also adding just onto that, as in part of it is we don't believe that we can only do this when we're small. It's scalable. So the point being is, I think really because we're looking at this through fresh lenses and saying, well, actually, what's wrong with the current way it's done?
Yeah.
What's wrong with the way the conventional banks are done? And don't get me wrong, there's a reason why they do it, and they have those processes and frameworks and checks in place. But what we're saying is maybe we can look at it slightly differently and be more agile and take more information points, if you will, because there's so much data available now. I can't remember the statistics, but it's something along the lines of in the last 20 years we've collated more data through the internet and so forth than we have in the last 100 years or something like that. So it's don't quote me on that, but it's just kind of showing that we've been able to amass a wide amount of data, and the more and more we see these tech firms come up, the more data that they have. So pricing somebody is in theory easier, because you can start to see what the kind of challenger banks have, and the information that they have on somebody's expenditure. You can take that information and say, well, actually, how much can they really afford? How much is coming in? How much is going out? So you can have more accurate data and make better informed judgments about somebody. And in regards to your questions about the risk, I think part of that is the risk is always there, and I think it's really important to emphasize that we still have to go through the process of credit checks and due diligence and so forth. Where we will be slightly different is that we can take a more using more accurate information. And the way our product is structured, maybe lenient is the word to be used, but used within the right context of actually saying we can look at somebody and say, well, actually, under a conventional system you might not be applicable. However, you can actually afford this based on the information that we have about you and the securities that we have within the product.
The other key difference is we can serve right to buy customers. So currently, right to buy customers can't get the current offering of Islamic mortgages out there, because they require the bank to own the property from day one. It's only transferred to the customer right at the end, and the local councils don't allow that. So there's quite a lot of Muslim council tenants who want to buy their property under the right to buy scheme, but can't get an Islamic mortgage. Whereas in our product, because the customer owns the product from day one legally, so they would qualify. So that's we can provide that service to all of those people who are crying out for Islamic home finance right now.
Brilliant. And so you guys have been running for, I know you've not launched, but you've been at this for a while now, and you've been developing a product, you're working with the FCA to get approval. When do you think that will come along?
So we're really hoping by the middle of this year. So actually, the FCA process has dragged on a bit. So back end of last year, we were getting very positive messaging saying that they're ready to approve us. And then unfortunately the caseworker we had at the time, he actually went off on prolonged sick leave.
Right, okay.
And so we almost had to start the process again with a brand new caseworker.
I see.
And so, that first 6 months has almost been wasted. Not entirely, but almost wasted. So it's just meant that the process has gone on far longer than we'd hoped.
And once you launch, I'm now thinking about really practically how many people will you be offering? And I know we discussed before about you doing a sort of Qard Hasana type approach. Do you want to talk us through that?
Yeah, so we've actually got a Qard Hasana campaign at the moment where the community sees the importance of this. What we're trying to achieve here is eliminate riba. Right? We're trying to eliminate riba. We have a real opportunity here to do something about this curse. It shouldn't be acceptable to us as individuals to have to pay riba to purchase our homes. It shouldn't be acceptable to us as individuals that our children might have to pay riba to purchase their homes in the future. And if we have the chance to do something about that, we have a responsibility to do something about that. So that's what this initiative is really about. And so what we're doing is we're asking the community to provide some Qard Hasana to help us get off the ground.
What is a Qard Hasana?
So a Qard Hasana is an Islamic loan. It's effectively where I lend you some money and then you pay it back to me. It's not interest based. It's just a friendly. It means a beautiful loan, right? So the idea being that those people who provide us with some Qard Hasana, they become part of the Qard Hasana pool, and they have first right to our services once we are in a position to start doing business. So right now our waiting list, alhamdulillah, is 3 to 5 years long. We have a massive waiting list of people who really, really want this product. But the people who support our Qard Hasana campaign, they go right to the front of that waiting list, and we will serve everyone in that pot first before we start serving the rest of our waiting list. Now, there's multiple benefits of this. One is that it means we can start doing business quickly and we can start supporting the people who want it the most. Because the people who believe in this vision and believe in doing something with our own hands about eliminating riba, they're the ones who we feel will be supporting this initiative with some Qard Hasana. It's not a risky investment, right? We're not promising to triple your money or anything like that. We're just asking you to lend some money into the pot so that everybody can benefit from that pot, and you'll get your money back, inshallah, in 3 to 5 years. But those people who really want to support this vision, they are the very same people who we want to support first. It means we can get off the ground very quickly. Then we can start scaling up, because now we've started doing business. Now we can have more institutional level conversations and start really scaling up.
And how can someone who's interested, give money to you guys, and how can they get in touch with you guys? How much should they be giving? Is there like a minimum, maximum?
Yeah. So all the details are on the website, primary-finance.com, and we've got a campaign page on there. It's the support us page on the website. So we do ask for a minimum of £1,000 Qard Hasana, but you can really give as much as you like. And the people who support us the most and the earliest, they are the ones who will go highest in the pecking order when we come around to supporting people in that pot. Now, any money that is given in Qard Hasana, once we provide finance to those individuals, that counts towards your deposit. So if we haven't already paid it back to you, that counts towards your deposit. If you need the money back at any point, we'll do our very best to give it back to you. We don't want to disadvantage people who are supporting us. At the end of the day, we're doing this to support people, not to hinder people. So the very worst thing we could do is put somebody into financial difficulty. So if people need that money back, then we'll do our very best to give it back to them as soon as possible, inshallah. If anybody gives more than £10,000, and there are a few people at that stage now, mashallah, then anything above the 10k is reserved exclusively for them, and they can have it back on demand if they need it.
Brilliant. And let's talk about the future. So where do you see yourself in 5-10 years time?
Well, let's talk about 20 years time.
Okay.
Our vision is in 20 years time to completely shatter the conventional mortgage market. We believe in 20 years time, particularly if we get this grassroots level support now from the community so that we can start scaling up. We believe in 20 years time nobody is going to want a conventional mortgage anymore, because it just doesn't make sense. When you can have, as Sheikh rightly mentioned, you can choose a conventional mortgage where you're burdened with debt for the rest of your life. The term mortgage is Latin, it means death grip. So the banks are, cheekily selling us something called a death grip. You can have
a death trap,
right, for the rest of your life, where you've got no flexibility in your payments, you've got no security in your home. If you ever miss a payment, you may very well end up with nothing, even if you've made payments on time all your life. Or for roughly the same price, you can have a product which doesn't burden you with debt, where you have complete flexibility in your payments, and where you have complete security in your home. It doesn't matter whether you're Muslim or not, it's a complete no-brainer. So we believe in 20 years' time, this is the product everybody's going to want. And actually, in 20 years' time, if we're the only provider offering this, we haven't done our jobs. Because we're doing this really to challenge the interest-based economy. We're not doing this to be the only provider, the monopoly, and charging the premium to Muslims for being Muslims. We're doing this to try and show everybody that there is a better solution, and that we should be demanding a better solution, and try and spark the change amongst the other institutions out there as well, inshallah.
I'd actually go a little bit further, and I'd appreciate that. Reza's probably echoes the same thoughts on this. As in 20 years' time, as in mortgage is one debt-based product on the market, but there's no reason why. If you again, let's just go out and let's look at from a practical perspective. The average we talk about the mortgage because it's probably one of the biggest things that you're doing in your life. So again, because you take out such a huge debt, but there are other things that day to day you might think about, like I want to run a business, or I want to buy a car. And as soon as you start going out into the market, you might go, actually, my mortgage is halal, but I need to buy a car, but now I'm going into interest, or I want to go into business, I need a small loan, and now I need to go into interest. So you see that creeps into every aspect of your life. And so when we kind of look at it, I appreciate we're looking at this in a nutshell of mortgages, but there's no reason why in 20 years time that we haven't rolled this out to the other products. So again, echoing the same point here is that we want to eliminate of interest effectively within the financial products, because of the punitive effects that it has. And so therefore any aspect that has interest in it, that's where we're going to be targeting. That's when now whether 20 years is an aggressive timeline for that, but it's still achievable. And part of that is this a spark for change? We'd hope so, because the reason why is we're not here to create, like you said, a monopoly where we're the only people providing this very unique product. And like we said, it's a very simple product, but what we do want to do is spark that change. And if we have to be the people that do that, then so be it. And what we'd like is the community to recognize that this is impacting not just their home purchasing decisions, but every other aspect. And so therefore, where they want to live a very truly, if you want to call it quote unquote Sharia compliant life, or adhere to their faith, or again, like I know we've talked about Muslims, and we talked about the kind of Islamic aspects of it. Right from the outset, this is a colourless product. It's vanilla. It's applicable to anybody that looks at the financial products and says, well, actually, that's quite unfair. That's quite unjust. That's punitive. And for those people to say, well, actually, I want to support that as well. And it's not a case of because you are Muslim, you get priority, or because you're Muslim, this is only for you. But this is something that's very close to anybody within any religious faith and denomination that believes that interest is something, whether they believe in a God or they don't, that interest is unfair. And so that's why we believe that this is something in 20 years' time that can roll out and hit every aspect of somebody's life.
And that's actually a point worth dwelling upon a little bit. The interest-based economy is effectively responsible for the enormous house prices that we see in this country. It's because banks create artificial money. That's what creates inflation. Whereas this product tackles that, because we're not creating artificial money. We're creating a true equitable partnership-based product. So the cost of a property should really be the cost of the bricks and mortars and the labour, plus a bit of profit on top. Whereas what we're seeing is a massive disparity between that cost and what houses actually cost, and it's all due to that artificial inflation caused by the debt-based economy. So it doesn't matter, whether you're a Muslim and believe that riba or interest is haram. There's clear socio-economic issues with the debt-based economy, which we are trying to fix. And so it's not just Muslims who we hope will be getting behind this. But one thing we do say is, to individuals who are considering supporting the Qarz Hasna campaign, is to do it not because you go up in the pecking order and you'll get supported first. That's not the point behind this. The reason to do it is because we have a responsibility here to give a better option to our children and to ourselves for purchasing our homes and cars and other necessities in life in a way that pleases our Lord and which doesn't create a socio-economic problem. And that's what we're trying to solve here, right? If people get behind us, we can't guarantee the success of the Qarz Hasna campaign. We can't guarantee that every single person will be able to serve them immediately within the first 6 months.
Right. Yeah.
But what we can guarantee is that this will scale up, inshallah, and actually start really making ripples in the debt-based economy and actually start providing a better solution. And that is the reason to support this product. Inshallah, the benefit to individuals supporting us will come.
Yeah.
But the benefit to wider society, that's something
that's
we
the
all have a
primary thing,
responsibility towards, and that's the reason for supporting us.
I'd like to reiterate that this is a collective responsibility on all of us. Like when our parents came to this country, they built basic social institutions like mosques and madrasas and halal food and those things, but they just didn't have the skill set to create Islamic financial institutions. But our generation, we have no excuse. We have that skill set, and we have the ability to create non-debt-based, Islamic equity-based financial institutions, not just as a solution for Muslims, but a solution for the whole of society. The tremendous dawah impact of that. Can you imagine? The Muslim community in this country is seen as a taking community, whereas if we can give society a solution to financial crisis, that if all finance in this country were done in this way. You asked earlier about whether our product is shockproof to the credit crunch. Actually, it's much more resilient than debt-based products because debts are debts. When there's a credit crunch, then the banks call in all the debt, and then there's massive default. Yeah. Whereas because there's no debt, even we can ride through a credit crunch because there's no default. So they just carry on paying rent as they would anywhere else, and then afterwards they can just carry on buying more equity and paying more. Yeah. So our product is much more resilient, much more shockproof than a debt-based product. And if that can be rolled out to the whole of society, that can actually restructure the economy and prevent financial crisis. And can you imagine the whole of society realizing in 100 years' time, hang on, Islam and Muslims solved our financial crisis. That's what's at stake here.
Yeah, and I mean, ultimately, the opportunity is there. We're offering the opportunity now. And it's a responsibility on all of us, especially as Muslims, to take that responsibility, right? It won't be acceptable when we're standing in front of our Lord and He asks us, you had the opportunity in front of you, what did you do about it? And we say, Ya Allah, I didn't need a house at the time, so I didn't support it. Or Ya Allah, I waited for somebody else to do it. Or Ya Allah, I couldn't see the immediate profit to myself. It won't be acceptable. We have a responsibility in front of our Lord to be able to say, Ya Allah, I saw the opportunity and I did something about it with my own hands. I previously hated it with my heart and I hated it with my tongue, and once the opportunity arose, I hated it and did something with my hands. And that is a responsibility, especially as Muslims, on every single one of us. And that is the reason to support this initiative.
Well, on that note, let's wrap up. Jazakallah khair to all of you guys for making the time to come on to the podcast.
Thank you for having us.
And it's been a pleasure, and I'm hoping that in 20 years' time we can reconvene on probably not a podcast. It probably doesn't exist at this point. I don't know what it will be. I'm going to heliographic type thing, and find out where we've got to, inshallah. But jazakallah khairan.
Inshallah before that as well.
Yeah, definitely in 5, 10, 15, 20 years, and see where we get to. Assalamu alaikum.